Got me falling right back.
Welcome back. In our last video we learned about how reversal patterns work. If you haven't yet watched all of our previous videos, we strongly recommend watching them first before watching this video. Let's get started. In this video we're going to do an exercise on reading price action. If you have watched all of our videos, you've pretty much learned the steps of how to understand price action. The 4 steps of reading price action are as follow. 1. Observing how prices moved in the past. 2. Observing how prices are moving now. 3. Predicting where prices are not likely to go next. 4. Predicting the possibilities of where prices may go next. The first 2 steps are about accessing what the market has already done. Based on your interpretation of how prices have moved, you can then move on to step 3. If the bullish momentum is strong, you know that prices are unlikely to move down in the immediate future. If you see a close below the opening price of a bullish anchor candle, you know that prices are unlikely to keep moving up in the immediately future. So all you need to do now is to take or manage your trades accordingly. Now let's go through a quick analysis example to see if you're on the right track. Recent price action indicates a mostly ranging market. There's no obvious buy or sell signal here on the chart. Can you tell where the latest anchor candle is? So far, prices have not closed below the anchor candle, so we must be prepared for the possibility of a continuation of the up move. Let's see what happens next. Now, we see a huge bear candle. Strong bearish momentum? Yes. Close below the anchor candle? Yes. This indicates a good sell signal. Let's see what happens next. If we took the sell trade, we would be in profit now. But we should be careful because the downward momentum is slowing down. We know that the downward momentum is slowing down because 1. The bearish candles are getting smaller. 2. A bullish candle approximately the same size as the previous bearish candle is formed. This indicates a lack of momentum in the market because neither the buyers nor sellers are strong enough to push prices further in their direction. This might be a good time to take our profits in case the buyers start to take over and push prices back up. However, if, for whatever reason, we think that prices might keep falling, we can just place a stop order to secure some of our profits. Let's see what happens next. It seems that prices continue to go up for a little bit, but now the upward momentum is getting weaker. Prices might just come down again. Important reminder: weakening momentum is not a good trade entry signal. It only indicates that the current trend is ending, so it's only useful as a trade exit signal. Weakening momentum does not tell you where prices are likely to go, so don't enter into a trade just because you see weakening momentum. Prices are just as likely to go up or down afterwards. Right, let's go ahead and see what happens next. Prices went down again, but we can also see the subsequent loss of downward momentum, smaller bearish candles. And in the last candle, we see the buyers coming in with a strong bullish momentum. So the question is, will prices go up next? To answer that question, we need to identify the last anchor candlestick. Let's have a look at what happens next. As you can see, the market was far from closing above the opening price of the anchor candle. So although we didn't entirely expect prices to immediately drop down again, due to the strong bull candle, we knew that prices would not necessarily continue to move up either. We just identified a random area on the chart when you get conflicting signals, and prices don't show any particular likelihood of moving up or down. During these periods prices tend to move randomly, so we shouldn't be looking to place a trade. Practice identifying these areas and be wise enough to stay out of the market. Let's see what happens next. Interesting, prices came down for a bit, but soon climbed straight up. This is a complete random movement. Traders who try to predict market prices during this period will be in for a frustrating ride. Notice the market continued to move up after prices closed above anchor 2 and subsequently anchor 1. And at the latest candle, we can see a long top shadow. If we had taken either one of the buy trades, now may be a good time to exit. Our prices are going to go back down? Let's find out. And yes, prices did go down. Can you see how the bearish candles closed below each bullish anchor candle? This indicates that the market is likely to keep moving down. I could go on with this analysis forever. But let's just stop here, shall we? I think you get the idea. As you can see, candlestick analysis is incredibly helpful in predicting short-term future market trends. For best results, these concepts should be applied on the 1-hour time frame and above. Remember though, candlestick analysis is not 100% accurate. No single analysis tool is. Always protect your capital with well-placed stop orders, just in case. Thank you for watching. If you found this information useful, please share my video with your friends. If you have any questions or suggestions, please feel free to leave me a comment below. And if you enjoyed the video, please hit the thumbs up button. And if you want videos like this, please hit the subscribe and bell button below. You will be notified when a new video is uploaded.